Hi, I'm Stan The Annuity Man, America's annuity agent, licensed in all 50 states. So what is the difference between a CD and an annuity? We're going to cover that, but before that, my team is imploring me, they're begging me, please be happy Stan, don't be yelly Stan and pointy Stan and angry Stan. I apologize for the intensity, but hey, I'm Stan The Annuity Man, America's annuity agent, licensed in all 50 states. I have to bring it, but not until this music. So is a CD, a certificate of deposit, better than an annuity? Well, that's a tough question. And the reason that's a tough question is because the word annuity doesn't mean one type of product. There's many types of annuities. But is a CD better than an annuity, like a multi-year guarantee annuity, which is the annuity industry's version of a CD? The answer is no. And MIGA's multi-year guarantee annuity is not better than the CD. They both have their place. They both protect the principal. They both offer a guaranteed annual interest rate. The only difference is from a multi-year guarantee annuity, that interest in a non-IRA type account grows tax deferred, whereas with a CD and a non-IRA account, you have to pay taxes on that interest every single year. But the backing, the FDIC backing of a certificate of deposit is much better than the state guarantee backing of a multi-year guarantee annuity. So the big question, is a CD better than an annuity? No. I mean, you have to look at them separately from the standpoint of what they can do contractually in your portfolio and where they fit. I do think that CDs are better because, in some cases, because they can be purchased short term. You can buy a 3-month CD or 6-month CD or 12-month CD, 18-month CD. But with fixed rate annuities like multi-year guarantee annuities, currently at the time of this taping, the shortest duration that you can lock in is 2 years. So what is a CD annuity? It's called a multi-year guarantee annuity. The acronym is MYGA, M-Y-G-A, multi-year guarantee annuity. That's a CD type annuity. And I love these. On our site, theannuityman.com, we have a live feed of the best fixed rates, MYGA rates, CD annuity type rates on the planet, and you can shop at your leisure. You don't have to sign up for anything. You just hit the feed, and then you put in your state of residence where you're at. By the way, I'm licensed in all 50 states. And then you put in the duration that you're looking at. You can shop, and these things change, and it is what it is, but it's a contractual guarantee. That's the good thing. Now, that's the annuity version of a CD. So when people say, I hate all annuities, Dad, I hate them, just hate them. I heard the guy on the TV said to hate them. Do you hate CDs? Do you hate guaranteed returns? Do you hate principal protection? Do you hate products with no annual fees? Do you hate simplicity? The answer to all those is no. So then you do not hate annuities, but the CD type annuities, multi-year guarantee annuities, fantastic. And the way that we're using them, you can buy them standalone. So I just want a 5-year guarantee or a 2-year guarantee or a 3-year guarantee. We also use them in laddered formats where you can buy a 2 and a 3 and a 5 at the same time. Obviously something that we need to talk about one-on-one. You can go to the site theannuityman.com and schedule a call with me one-on-one, 30 minutes of brutal facts. I know, and some fun worked in there as well. But that's a CD annuity. It's called a multi-year guarantee annuity. So can you lose money on an annuity like a MYGA, a multi-year guarantee annuity, a CD type annuity? The answer is no if you hold it to term. Now obviously there are surrender charges during that duration that you choose. So for instance, for an example, if you bought a 5-year multi-year guarantee annuity, so you have an annual guarantee for those 5 consecutive years, if you sold everything year 3, there are surrender charges and technically you will lose money. But if you hold to term, you will not lose money. These are principal protected fixed rate annuities, CD type annuities with no moving parts, no annual fees, no gotcha fees. They are what they are, so you will not lose a penny. So is now a good time to buy annuities like multi-year guarantee annuities, CD type annuities? There's no perfect answers. They're just bad sales pitches, right? There's no perfect timing. It all comes down to contractual guarantees. Do the contractual guarantees offered in that CD type annuity, multi-year guarantee annuity, do they fit your specific situation? Are you happy with getting X percentage in a 3-year or 5-year? The reason I'm saying X is because people are going to watch this video a long time down the road, and I don't want to pigeonhole myself with current rates. You understand that. And the reason I say that is things change, rates change, and annuity MYGA rates, these fixed rates, they are dependent on current interest rate. So at the time of this taping, obviously people perceive rates to be low. We'll see if they move up. We'll see if they move down. Who knows? But that leads to the question, is this a good time to buy? With multi-year guarantee annuities, CD type annuities, I encourage you to not go farther out than 5 years from a lock-in standpoint. Now, that's just basic yield curve analysis, looking at where you're getting your best bang for the buck. And the annuity companies are really not rewarding you to lock in longer than 5 years at the time of this taping. Look at the date. Okay? So typically we're doing 5 years and in. So 2, 3, 4, and 5 year type MYGAs. Hopefully rates will move higher and we can then transfer the current MYGA that you own after the maturity of it to a higher yielding MYGA. So there's no perfect timing. It's all about the contractual guarantees. By the way, MYGAs, multi-year guarantee annuities, can be held in IRA accounts, non-IRA accounts, Roth IRA accounts. The guarantees are the guarantees. But the bottom line with MYGAs is that they're not backed up by banks or FDIC insurance. When you make a decision to buy a multi-year guarantee annuity, you're making a decision on the claims paying ability of the carrier. Period. Now, yes, there are state guarantee funds. Each state has one that backs annuities of all types up to a specific dollar amount. But number one, it's illegal to use that in a sales presentation, which should tell you all you need to know. And number two, they really haven't been tested in Stan The Annuity Man's opinion. So when you buy a multi-year guarantee annuity from me, which you should because I'm the number one seller of these bad boys, they're great. Okay, I love them. You should be basing your decision on the claims paying ability of the carrier, which leads to kind of the next thing to talk about. I do look at the bonds and the solvency ratio and all that stuff, and if I do not think you need to put your money with a specific carrier, I will tell you that. That's my job. My rear end's on the line to make sure that you're not putting your money with a company that I feel, I'm not perfect, but I look at what they're doing, that can't back up those claims. But FDIC insurance that backs up CDs, I'm telling you, that's the best thing on the planet because F stands for federal. F stands for they're going to tax us to get the money. F stands for that's the best. I know that the Fs aren't working, but you know what I mean. F, the federal government, FDIC backing of CDs is the best thing going. But I do like using CDs, and I don't sell CDs, but CDs with multi-year guarantee annuities. They work perfectly in conjunction because they both guarantee your principal. They're both very simple. They both have an annual contractual yield. They're one and the same, albeit there's a couple little nuances that separate them, but they work the same. Now, the question you have to be asking yourself is, why am I now just finding out about fixed rate annuities, multi-year guarantee annuities? Why does my advisor or my annuity agent current, which by the way should change to me anyway, why aren't they telling me about this? Why don't they show me multi-year guarantee annuities? Why are they just showing me indexed annuities or variable annuities? Why, Stan the Annuity Man? Why? It's my theory on this. Is that it's because multi-year guarantee annuities have very low built-in commissions. Remember, all annuity commissions are built into the product and paid from the company's reserves. So if you put $100,000 in, you see $100,000 go to work for you. But indexed annuities, even though they're CD products, have a much higher commission in most cases than multi-year guarantee annuities. The other thing too is the stories, the sales pitches on indexed annuities can be beefed up a little bit and can be polished up a little bit and can sound really good. With multi-year guarantee annuities, you're going to get this interest rate for this specific period of time, sir. That's it. It's very simple. I like simple. Simple's good. Simple's very good. I'm okay with indexed annuities when they're used properly and they're fully explained. But the reason that you haven't heard about multi-year guarantee annuities, in my opinion, is there's just a huge commission disparity. The indexed annuities, if you're locking them in for a 10-year time period or a 7-year time period, have much higher commissions than multi-year guarantee annuities. That's my take. Hey, do me a favor, hit the like button, hit the subscribe button, go to my site at theannuityman.com and check out our live MYGA feed. See you next time.